ARM had a really good quarter. The company's revenue rose almost 20%, 983 million, so just under $1 billion. Now, as a bit of a context there, this is a company that was doing about $1 billion a year a few years ago, and now they're doing $1 billion a quarter. I would like growth like that. I mean, it's a little bit slower than Futurum, but I mean, I'm happy at that level. They're making more money. This has been a big focus of the company. One of the big challenges for ARM along the way was it had this really high volume royalty business, but it actually wasn't super profitable.
Yeah.
And the profitability gap was because they were basically living their life in this very low power, very low
IoT for the most part.
What's that?
IoT space.
Basically connected devices, very low cost, low per unit. So they were doing billions of units at very pennies, kind of thing. And it was driving a lot of revenue, but it wasn't super lucrative. And so now you got the company growing at a great clip. It's raising / meeting its guidance. It's part of this Stargate project. Clearly, we've seen over the last week between Meta, Alphabet, Amazon, Microsoft, that the whole CapEx is over because of DeepSeek was absolute positive
nonsense.
God, I don't even know. I need to put a sizzle reel together how right I was. I'm going to put that out there. You should do the same. I mean, like I said, I actually think we're going to go faster with AI. DeepSeek taught some things. I mean, it's not an all negative situation. It was just people's ability to see that like lowering costs wouldn't grow, thinking that it meant less growth.
Well, they thought the entire market was training, which there was a lot of training going on, but every time you even had to run those training, so the workloads that were trained, that inference was very costly.
Yeah. And by the way, now we can do more inference across more applications, consumer to enterprise at a level of scale. You bring down the cost, the resale value, you got margins. It pushes out from sort of core to more industry and enterprise use cases. Money can start to be made by handset makers and device makers, as well as by app makers. There's just lots of different places to make money. Trillions of concurrent inferences. Agents and assistants all running at the same time. Someone's going to monetize this. And in this case, finally, it won't be just NVIDIA. So that's a good thing. But NVIDIA, by the way, a lot of that CapEx money still going to go to NVIDIA. I mean, I like Broadcom, Marvell, others are going to do fine, but there's a lot of dollars to go to NVIDIA. And I think the market sort of recovered. That thing was been a really interesting few weeks in NVIDIA stock. We talk enough about them. We'll come back to them at some other point. The other thing I'll point out is the company's diversification from royalty to licensing is looking really good. It's a little under 50% licensing, but that's all about, the company's done really well in areas like data center, in automotive, the higher end PC servers. So areas like Amazon. So you saw Amazon's big CapEx number, you see what they're doing there, but you also see that Amazon, I think the number is something like more than half now of their compute, server compute, and a large chunk of it, and going forward, that number keeps growing, is Graviton. That's ARM. So ARM's doing really well there. So that's a for instance. And by the way, Apple, if you think they're doing well, that's ARM. Qualcomm, there's ARM technology there. All of this is where ARM is doing really, really well. I'm optimistic about it. I think the company's ability to diversify, and what I keep pushing on when I talk to, you and I both got to talk to Renee, I think around earnings here, is the ability to continue to show the market they can get more margin by this more custom work, the CSS work they're doing, the customization work that they're doing. That's where you diversify away from that kind of high volume, low margin royalty revenue.
Yeah. So, if I look at just the raw numbers, I mean, they've had a consistent streak of a double beat and raises. And if I look at the revenue beat, it was in line with the other quarters, right? It wasn't the highest quarter. It wasn't the lowest quarter of the last four. And on an EPS basis, right, they beat between, 17 and 15%. But it was really about the guide. And it's almost a carbon copy, ARM has had, similar degrees of performance, and there's a giant sell-off. In fact, I predicted that going in some of my kind of show notes that I had sent to Yahoo Finance and CNBC, and sure enough, it happened. I think a lot of that has to do with the valuation. Stuff that's just not being factored in here right now are things like Stargate, right? They do appear as if, they are the CPU of choice. They were the only CPU that was listed along with the Stargate announcements. Probably the only thing that could indicate that they don't get 100% of that is if there's outside financing from somebody related to an Intel or an AMD or something like that. So that's not even priced in here for the opportunity. A couple things happened with the guide, in terms of kind of an EPS, people wanted a bigger number. And if you go and look at their, at their forecasts and what they've been spending, they're spending a lot on R&D, right? And I know that's not a great thing for the stock market, but it's a great thing for stuff like me, things that I think are important. I think, increased R&D keeps that pipeline going. And I think, in a year, when we see what's cooking with Stargate and new opportunities, we'll see if the payoff was there. There were a couple analysts too who were kind of picking on the percentage of royalties for V9. They thought it didn't grow faster, meaning it was 25% in the December quarter, the same level as the prior quarter. There were a couple questions even on the call that came up from Needham brought it up, and then there were a couple notes from New Street as well that related that. But to me, not I don't know, something to be expected, just kind of weird. Final thing I'll reiterate is that you're seeing increased penetration of ARM-based hyperscaler servers, right? Whether it's AWS Graviton, whether it's Google or even Microsoft, those are all going to be going up and to the right. Microsoft and Google will be at a much steeper percentage pace. The mass right now is Graviton, where you have 50% of their capacity, increased capacity for the past, I think, year and a half or so has been going to Graviton. And knowing AWS, they're just going to keep putting the pedal to the metal. And we're going to talk about them and their $100 billion CapEx. ARM is going to benefit from that as well. Kind of the dark horse here is, what is Meta going to do, right? Meta hasn't shown up. They're a top 5 hyperscaler. They haven't even showed up with their ARM-based server part yet. Will it happen? I don't know. Big relationship between Meta and
AMD.
Meta and AMD, and then Meta. It's funny, I was going to call them Avago and Broadcom. So who knows where that custom processor business is going to go.
Yeah, that's really interesting. And I didn't say this, but this feels like one of those quarters where the market really feels that a lot of these companies are priced super well. And the reason that is because good results are actually leading to selling, which means people were sort of buying into the earnings. They were seeing the momentum, but the pricing was only had more upside if these companies absolutely destroy the results, or if your name's Palantir. Because now Palantir is worth more than AMD. It's worth more than it's catching up to some really big companies. Palantir is bigger than 3 Intels at this point. But that's just the world that we live in sometimes. I'm not saying they're not a great company. It's just super interesting to see how that sometimes the market can be completely impossible to read.